Hello, good evening. Welcome to this month's webinar of Pulse on Property with Residential Estates. Thanks very much for joining us. Appreciate you giving up your evening to join us to talk about all the latest property news. I know some of you will join us for the first time, so thanks very much for that. I think we met a few of you at the Property Investor Show, didn't we, in London? A couple of weeks ago now. It was 2 weeks ago from today. And some of you will have seen our webinars previously, so thanks very much for returning. Hopefully they were okay. Shortly, I will talk a little bit about how these webinars work and what we plan to cover this evening. But just to kick things off, I thought I would introduce ourselves. So I'm Michael Holliday. I'm the investment manager of Residential Estates. I've been in the industry and at the company for the last 10 years now. My role is predominantly acquisition, so I work alongside the likes of Paul and Owen to bring on the very best developments for our buy-to-let investors, along with working on the sub-agent network side and helping to manage the sales team as well. To my left, I have James Davis.
Hello.
Who is one of our experienced investment consultants. James has been in the industry for what, over 20 years now?
Just over 20 years now, yeah.
And different aspects, haven't you, of the industry? So you've obviously doing sales at the moment, but you've been in the financial services.
Yeah, so 10 years in financial services, and then over to the property side for about 10 years,
Yeah, great stuff. And then to my right, we have Andrew Brassey, who is one of our business development managers.
Good evening.
Andrew has been with us just
a bit too long.
Yeah, just over 6 years now.
6 years.
We're trying to work out how long you've been in the industry.
40 something years.
You started telling me 82, and I thought you meant 82 years, but actually you meant it started in 82. But vastly experienced. Obviously, you work predominantly in the sub-agent network side, and also you help on the resale side and resell some properties for clients as well. So between us all, plenty of years of experience, and I think one thing that we all three of us have in common is we have buy-to-lets ourselves as well. Absolutely. We've got our own portfolios, so we're not just giving advice about doing it ourselves. We've got experience on that. We know the things to look out for, the good and bad side of property as well. Cool. So talking about a little bit what we plan to cover this evening. Well, I'll start things off by talking a bit about residential estates, ourselves, who we are, where we came from, what we specialise in, especially for those of you that have not come across us before in the past. We'll then delve into the latest property news, so things like interest rates, the cash buyer potential at the moment, and look a little bit to the future of what we expect to happen over the course of the next 12 months. And then we'll dive into our current properties, so our current developments that we have for sale. And we've got a real mixture, haven't we, tonight? We've got the likes of PBSA, purpose-built student accommodation. We've got traditional buy-to-let properties, obviously short-term let properties, something we really specialise in, and a couple of other ones as well. So yeah, stay tuned for that at the end of it as well. As always with these webinars, we want them as interactive
very much so
as possible. Please do ask questions. You can see on your right-hand side there, you can pop up, ask a question, put it in the chat section if you want.
So I think if there's something you're unsure of that we're talking about, because we're just going to chat away about the various bits here, but if you think, some initials, PBSA, not quite sure what PBSA is, shout out.
That's it.
Question.
There's no silly question, is there, on it at all? No. So please do shout up. We like it.
I think what we'll do as well at the end, we're going to we'll send out again with options to book calls and stuff like that as well. I think
absolutely, no, it's a good point. So you'll get the opportunity during the webinar to book in a one-to-one. It's a free consultation where we actually listen to you and find out your situation and see what we think is the best property options to offer you as well. So hopefully you find it interesting. And we will kick things off, as I mentioned, by talking a little bit about ourselves. So we are Residential Estates. We've been going now for the last 30 years. We're based in Chester in the northwest of England. And we cover a variety of areas of the property industry. Obviously, we specialise in selling buy-to-let property, but we also manage buy-to-let properties as well. We source it. So we like to think we cover the full cycle.
It's holistic, isn't it? Cover the whole thing. And under that banner of buy-to-let, it could be an ASD, could be short-term, could be corporate, holiday let.
That's it.
I think on that side, that's the key thing. Is that a lot of stuff that we take on is stuff that we want to manage, that we know that works, which is not the case in the industry. We're quite unusual like that. It's the stuff that we sell is because we want to manage it.
I think that's a very valid point, James. the stock that Mike and Paul and now Owen will bring on is stock that we think, developments that we think, yes, that will manage well. That's a good development to be involved with, and it gives you a closer the buyer a closer relationship to ourselves as a company. I think.
Well, it's as Steve, our owner, would say, it's having the end in mind, isn't it? And
yes.
What do you plan on doing with these properties and the managing side of it? And it's something, like you say, we very much focus on. So it forces us to choose the very best locations on it. Hello to Shannon, Srinivas and Alan, who popped up in the chat section. Appreciate you joining us this evening. So what else do we do? Well, we also have an international sub-agent network of introducers, and Andrew will touch on this in a minute. And I know some of you that maybe joined us, that met us at the Property Investor Show in London, there was quite a few sources, wasn't there? People that came to our stand that are looking to get into that at the moment. Whether you just be an introducer and you've got links to high net worth people, or you're an actual estate agent yourself, it really varies, doesn't it? And Andrew, something you've done, isn't it, for a number of years, not just with residential estates, but your previous companies you worked at as well.
Probably 2004 started. Yes, and very much built that network, and very fortunate to travel the world with it. I can't complain.
COVID put a bit of a stop to that,
it
didn't it? A bit of a hiccup.
It certainly did, yes.
But it allows us to reach, different countries, different people, which is not always that easy, is it? People understandably do buy off their own a lot of the time. So us being able to have that network.
And it's encouraging that overseas buyers are willing to invest in the UK, actually come into the UK and put 50, 100, 200, 300,000 into the country, into our economy. And a clear insight that they believe that we have a stable economy.
No, that's it. And we have the traditional estate agency side of the business as well. So we do local residential sales and lettings. That Matt heads up that team there as well. And as I mentioned earlier on, we've got a really experienced team of property professionals. It's something we specialise in. Certainly when we're recruiting people to bring in, it's got to be experienced.
And how many are there now? Do you know, I lost track the other day in the company.
About 24 of them.
Someone said, there's about 19, maybe 20 of us. No, there's 24. So we're growing. We're growing.
No, absolutely. And we cover the whole nation as well, don't we, of properties where we sell. We've sold as high as Aberdeen, as low as the likes of Cornwall. So even though we're based in Chester, we do cover all areas of it. There's always got to be a story to it, hasn't there? That's what we sort of say. But providing we've got that, providing there's a rental demand of some sort.
Well, I think that story creates a driver as to why that development is going to work, maybe why that town, that city is going to work. So it sounds a story behind it, but it's more what's going to drive it.
I think a lot of it's driven as well by the relocation companies and that as well, who are telling us where we need properties, and that's where you're going out specifically sourcing them. We like Aberdeen was a good example. With Shell to go and look for it, wasn't it?
100%. So in terms of the types of investment properties we cover, and we'll mention a few of them tonight, with some of the options we have. So we have obviously the traditional buy-to-lets, your typical 12-month tenancies. On that, we absolutely specialise in short-term lets and holiday lets. We've been doing it for the last 15 years now as a company. So before the likes of Airbnb was even a thing, we were doing it as well. Purpose-built student accommodation, Andrew especially has covered a lot of that, and that's really grown these last couple of years with rents rising. And recently we've done things like HMOs as well. We haven't done it for a number of years, but the last couple of years we've had the odd HMO that we've brought in there as well.
There's a strong market for an HMO still. It's not for everyone. There's a lot of work involved in running an HMO, but the market is there. We listen to what our investors are saying. So,
I think we're very choosy, aren't we, on the HMO? I think that's what I always say to clients. We probably turn away 9 out of 10, don't we? From a due diligence side. So you've got to be, they're very good, but you just got to make sure they're the right ones.
And the key is trying to match up, the right property for you as an investor. Not everyone suits you on it, whether you're cash buyer, mortgage buyer, so it's, it isn't a one size fits all. But that's why we like to get to know you as an investor.
Just notice there's a question there. Can we want to answer that one? Andrew, do you want to cover that one? Sub-agent network introducers.
Stephen's just asked, what's a sub-agent network and what are introducers?
So the sub-agent network is like, say, ourselves, a company that may be based overseas or based in this country, and they don't have, that company doesn't have the facility to, as Mike and Paul do, source the development, and they will act as our an intermediary with ourselves to sell our developments for us. So it gives us, from our perspective with regards to the developer, it gives us an additional source to get the product into the market.
Do you find most of those, Andrew, that then we end up managing them as well when we do sell them the short-term nets as well? It's normally full service. They buy the property by an agent, and then we manage it for them as well. Okay.
I think we tend not to talk initially to the client of the agent until we get to completion, and then we offer the services that maybe
and as I mentioned before, it really varies. It can be just a one-man band introducer who just does it on a sideline, who does has high net worth people and sells property, or it can be a full-time agent. It really does vary.
So the introducer is very much the person that has links to other people, maybe an IFA, that doesn't have the property experience and is saying to us, look, I've got a client, he's looking to buy property. I'm not interested in marketing property to him, but here he is. He'd like to talk to you.
Yeah, absolutely. So yes, even if it's of interest to you, that please do get in touch. We can set up a call and talk in it a little bit more detail of how that works. So the latest property news. Well, there's been a lot, hasn't there? Last 5 years, there's been an awful lot that's been in the news. We've had a change of government, we've had all kinds of things that I'm sure you probably got questions to you on of what we think will happen with the change of government. I think for us, the biggest thing has been around interest rates. We're fortunate enough that we sit on the Bank of England panel. We were chosen by them as the Northwest agent, so we get a little bit of an insight as to where interest rates are going over the next year. And I say we, it's the royal we, because it's actually Andrew.
It's myself,
Andrew that goes to the majority of them, don't you, on there? But interesting though, you get to give your insight, don't you, from a property point of view, and they get it back.
It's an interesting one. It's the North Wales branch of the Bank of England, and we feed into that our experience over the past quarter and our expectation for the second quarter or third quarter, fourth quarter of the year. But it gives us very much an insight. There's the Bank of England representative for Wales there talking to us. We've had instances where Andrew Bailey has been on a Zoom with us all. Wow. The chief economist is there as well. So we get, as a company, it probably works better for us more than I actually import the information that we gain. A lot of it, unfortunately, is confidential, so we can't then put it out into the public domain. But it does give us an insight talking about interest rates, where they think interest rates are going, when they think they may ease, what they think inflation is going to be over the next quarter, 6 months. It's a very interesting. It's a couple of hours.
It's been tough, really. There's no sort of getting away with it. I sort of look back when I joined it 3 years ago. Typical investors, buy-to-lets was a lot easier. People were putting down a 25% deposit. It was a lot easier to get a mortgage, and they were getting rates of 3%, and it really stacked up. And it's been harder the last couple of months, so we've had to look at more investors have had to look at more cash deals. But I'd certainly say over the last month or two, rates have dropped. I don't know what you guys, but my clients are now, I've seen rates below 5%. We're talking 7% 6 months ago. So we're definitely seeing some good green shoots there.
And that's before the base rate.
That's lenders cutting rates.
And I think all the signs are there. They've been saying at these meetings that by the end of the year they will.
The gist seems to be August, September. And we'll see maybe a 0.25% drop on it. That seems to be what they're saying.
So what will that bring when that hopefully does happen? Well, I think we're going to see a bit of a surgence back into the market. The property will be seen, in a very positive side. It'll be on the news, and that naturally brings with it inquiries from people of interest, which then pushes prices up. And it's something we've been saying this last year and a half to people of, look, it might not feel it, but sometimes these are the best times to get in there early and purchase.
It's always that question, isn't it? Are we at the bottom of the market yet? And we never know.
We'll know in a couple of years, isn't it? When you look back.
Exactly. And I read something the other day about, it was in the Sunday Times. You can never really tell when the bottom of the market is until it's gone. And then you think, oh, right, it was 6 months ago, it was 12 months ago. And these two chaps were talking, an article was saying, if it's right for you now, buy it. Because today you should be buying long term, medium to long term. You shouldn't be thinking, I'll buy it today and I'll sell it tomorrow. And if you have it long term, we all know property is cyclical. It will continue to go up as it has done through history. And
you can use it to your advantage. We put on there cash buyers are in a strong position. They certainly are at the moment. When I'm negotiating with developers at the moment, trying to get the best price for our investors, we're saying, look, Mr. Developer, interest rates are so high at the moment. You're going to have to bring those prices down of these apartments to be able to do it. So they may knock 15,000, 20,000 off, let's say, per apartment. great opportunity for a buyer, because we all know interest rates don't last forever. You know, it might lock in for 1-2 years. You might pay a little bit higher rate, but you're not going to pay £15,000-20,000 more of higher rate. So, you know, you buy it at a great price. You can also look to refinance. A number of our investors do that if they've got the cash, if they're fortunate enough to get in there early, get a real good price, and then pull the money back out, you know, when the market recovers.
That's right. And certainly on the resale side of it, maybe 2 years ago, the price was the price. You know, it's 80k, it's 90k. That's what we're going to pay.
Yeah.
But we're starting to see sellers saying, look, you know, get me a reasonable offer and I'll consider it, and taking a lower offer on the strength of that, where you know the interest rate was maybe at 6%. Well, to get the return I need, instead of it being 100k, I've got to buy it at 90. I'll offer you 90, and the seller saying, do you know what? I'll take it.
That's it. I think Srinivas has just put in there. Hello, Srinivas. You mentioned about the economists sort of saying that maybe you're moving away from August reduction. It might be more like September. You could well be right there. You could be right with that. Like I say, I think the indication has been that certainly by the end of the year.
Yes.
It is, you know, whether that's August, September.
I think by the end of September, I might be wrong, but I'm thinking, you know, maybe not August, but I think September.
I think a lot depends on where inflation goes. That will be the driver for them.
Yeah, that's it. And it seems to be going in the right sort of direction, isn't it? And that's why they're pushing it that way as well. But on the other side of it, so rents, we've talked about this on a number of webinars of how much they have increased, certainly in the last 12 months. And then in a particular area we wanted to sort of focus on tonight was the student property side of things. Because Andrew, it's something you've heavily focused on. You do a lot of the resale side for some of our clients, and you've noticed how much they have spiked.
Very much so. We had a sort of dip, obviously, around COVID, and getting probably to about 22. But since 2022, we've seen rents rise significantly. Just looking at, and we have that close contact with developments we've sold in the past through resales. And you look at the rents, you've gone on, say, Orm from maybe 130 now to 170, 175 per week on a 51-week term. London Road up to 200 a week on a 51-week term. We are seeing those rents rise, and it's not just developments we've sold. Looking at, say, parts of Liverpool, Sheffield, we're seeing a similar, maybe not quite as high, but we're still seeing probably 10%, 8 to 10% rise on rent.
I think it's safe to say where we're seeing them as well is not necessarily in the big cities.
I think you're absolutely right.
I've been looking at universities with my daughter, and you know, Sheffield was one example. It's cheaper than in like your Newcastle under Lyne and Huddersfield. So I think, you know, there's certainly more of a supply of PBSA, purpose-built student in, you know, the likes of Liverpool, Manchester. There is a lot of supply.
I think a lot of the major cities going to maybe the red brick that Russell Group has got a level of supply that is borderline. Liverpool, Manchester,
Birmingham, I guess.
Newcastle's heading that way. Nottingham, Sheffield, and it's the likes of maybe say Huddersfield, which we'll touch on later. Newcastle under Lyne,
Stoke,
and it's looking at universities that are not red brick. That you think, why are we looking at Keele University or Huddersfield University?
I think what you've got in these big cities, though, you've got areas of the cities which are kind of almost known as like students that are named roads. Wavertree, Smithdown Road, where you've just got rows and rows of houses
converted
into HMOs.
Very much so.
So
and it's not just the student side, in the residential side as well is massively increased. Obviously, we specialise in the short-term let properties, and you know the returns you can get from short-term lets has always been good and is still strong. But that backup of a standard 12-month rental has really risen, and you know, and that's been great to see, because we've always sold them sort of properties on that basis. Look, what a great plan B option you've got.
I've had clients complete on properties or off-plan properties, and you know, waiting for a year for it to complete, and they were expecting rents of around about £500, and they've been getting nearly £700. So they bought it as a deal at that price, buying it expecting £500, buying it, you know, £100,000 property, and they're getting over £700.
You look at those in likes of Wakefield and Hull that are sold, and bearing in mind, you know, James said it can be a 12-month, 18-month lead-in, 2-year lead-in, and the rents have distinctly moved up from where we were predicting.
Well, you've seen it probably in your own properties, I'm guessing.
Absolutely.
2
years ago, probably 2 years ago, 975. Now we're at 1,200.
And I think the good thing as well, touch wood, it seems to go in the right direction. Utilities have
eased a bit.
There was a point, wasn't there? You know, what was it, a year and a half ago, something like that, where they really spiked, and it was causing problems. But that now dropping as well has certainly helped us on that front.
But again, looking at my own in Manchester, there, the tenant moves out, the current tenant moves out, I think it's something like the 20th, the new tenant who's already signed up, and this is August, 20th of August, new tenant signed up, moves in on the 27th.
Yeah.
It gives me a week to give it a quick
Yeah.
fettle.
Yeah, quickly.
There's not enough, there's not enough
Sort of
houses, simple, you know, there's not enough to be sell, there's not enough to buy, there's not enough to rent, is there? You know, we're a increasing population of a small island.
Yeah,
it's only always going to go one way.
It's never going to change, is it, on that front? You know, obviously we've had the new sort of government, and we had quite a lot of people that have messaged in, and what will this mean for the property market? I think for us, it wasn't really a big moment. You know, I think everyone knew Labour were going to get in power. I don't think it was a particularly big shock. The interest rate side for us is more of a bigger area, something that we keep an eye on. The change of government, like you said, James, it's not going to change the fact there's still a massive undersupply of property in the UK. And what does that do? Well, it means rent's going to go up. People can't afford, unfortunately, to maybe get on the ladder, so they have to rent. Competition, it forces it up, which is great for investors as well. I think there's a question coming from Simon Jones. There's a lot of news at the moment about the squeeze on Airbnbs and holiday lets operators. How do you see the short-term let market in the short term? As I know it's one of your strengths. I mean, it's something, it depends what type of short-term let property, I'd say, Simon. You know, if it's somewhere, let's say on the coast somewhere, and it's very much a pure leisure holiday let, that might be taking a hit. I don't think the staycation market is quite as strong in that sense on the leisure side. No. But our speciality is more on corporate lets. So, you know, secondary sort of city locations, like Preston, Wakefield, where you're getting corporate bookings in. So it could be construction workers, that type of thing, that are booking apartments for 2 or 3 months at a time. And that is stronger than ever. People don't want to commit to 12-month tenancies now, you know.
And going on to that, just here we are in Chester, and Aldi, the supermarket, are looking to build on the airfield site. And they're talking about building their biggest supermarket in the northwest there. Well, it'll probably be a 12-month, 18-month construction program, and they will pull people in to do that construction. And not talking politically, but when Labour say we're going to build 1.5 million homes over the next 5 years, at the moment we haven't got the construction team to go out and build those homes. So they have to pull people in. It's not a local construction firm. And then short-term.
I think a big one as well on that though for Simon as well is, I think, you know, this is something that's, you know, waiting to happen. I think it will happen within the next few years. Is the government or, you know, local councils are going to clamp down on it. They're going to clamp down on the people who are doing it illegally, who's not allowed within the lease. And I think that's the way, you know, I think where they will clamp down on it. Whereas, you know, 10 apartments in a block, you're not allowed to do short-term lets in the lease. And just one person has decided to do theirs as a single use Airbnb. Whereas, you know, one really important thing which Mike cover is what we do when we take on a property to make sure that's allowed within the lease. Of these sort of 4 or 5 apartments, you know, the one we'll talk about in Lytham a bit later, you know, they are specifically for short-term lets. The 5 apartments is allowed within a lease, and probably all of them will be operated in that way. And I think what the government want to get away from the local councils is these just one-off ones, which they're doing illegally. They are. There's stats out saying 80% of the properties on Airbnb aren't allowed to be used.
It's a great point, and we've seen a few developers actually start to change, haven't they, where you've got to have a registered provider to operate it, so someone like us can do that on it. As I say, like say your Joe Blogs just listing it on Airbnb, and that's where you can sometimes have problems, you know, hen parties, stag do's, that type of thing. You know, a company like us will make sure them type of people,
that's right, so
them type of events don't happen.
Of those bookings, isn't it?
But good question.
Yeah, and there's an argument as well of, you know, properties in those sort of coastal areas that I mentioned being left and not used. Yeah, I don't think it is great, to be honest. So, you know, tightening up a few areas of the short-term let side, I don't think is a particular bad thing.
Well, I think certainly from, you know, in North Wales, just Wales and generally, there's a lot of stuff about increasing council tax, and people with second homes who go there once, twice a year. I really generally get that, Mike, as you said, because that's not adding any money to the economy. You know, if it's holiday homes, you know, that's like, you know, almost rented as a hotel, that's bringing money to the economy. But you know, a £1 million house by the sea, what someone uses twice a year, that's not really adding anything to the economy, is it? Whereas,
and that's the argument for London, isn't it? They reckon, you know, again, through myself, the overseas network, a lot of overseas buyers have gone into London over the past 10 years, and sections of London are empty, and it's not bringing anything into the economy. Whereas true holiday let in you know, the topical areas, Cornwall, Lake District, Peak District, those holiday makers actually
drives money to the economy.
Draw money in. Yeah.
Absolutely. Anyway, we're waffling on. Simon's gave us his thumb up, so that's a cue to move on. Cool. So yeah, that's the latest property news. As I mentioned, pop up if you've got any other questions about the latest news. Feel free to do that as well on there. So let's dive into a couple of examples of developments and apartments that we have available at the moment. And as we're doing this, we'll be talking through not just the property itself, but the actual model behind it as well. So as you are doing, feel free to ask any questions. So we will start with a brand new purpose-built student accommodation block that we have in Huddersfield called Vision. It consists of 198 luxury studio apartments. They've all got their own self-contained kitchen, bathrooms, but they also have excellent communal facilities, a big communal garden area on the top. It's got a cinema room, gym, all sorts.
I think this is probably the best spec PBSA we've launched, isn't it? For the add-on facilities, it's not just the studio, the self-contained studio. It's all the add-ons.
You can call it like a 4-star hotel, like the Hilton.
I think
if you went there,
I think Vision could be called 5-star.
Yeah.
When you look back to some of the PBSA that certainly I've sold, 2012, 14 years ago, it's a long.
The standards are growing,
immensely.
And from a student point of view, we touched on HMOs. This is a sort of different level, isn't it?
Absolutely.
Standard of living for the students. The parents really like that as well. The guardians that are sending their students to stay there on it. It's important to them of security and well-being.
The expectations of the students has changed massively, certainly from maybe not so much from Mike, but certainly from Mike was in a 3-star hill.
Like a bedsit I was in.
You're happy with a bed. Ensuite? What's that?
What's that? Yes. Yeah, 5 rich trying to cram in there.
8
o'clock in the morning.
Mine was bad, but that was just because it was I went for the cheapest room. It won't surprise you to hear that. But amazing facilities. Like Andrew says, this developer we've worked with a number of years, and each one does get better and better standard. And if it is of interest when we're talking through it, we can arrange a site visit and look at some of the other ones if you ever wanted to and get a feel for it that way.
Absolutely.
It's worth on it. One of the good things now about sort of student property and a lot of properties in general is the fact there is no ground rent on it, which does appeal. I know in the past there has been ground rent. Sometimes it's doubled on certain ones, which has caused problems. But again, a little bit of tightening up of legislation hasn't done a bad thing at all for the industry, and the means there's no ground rent, and it's a 125-year lease on it. So how does it look as an investment? Well, prices start from just under £87,000 for a studio apartment. You get a 10% net rental yield assured for the first 3 years by the developer. So regardless of if the student is in there or not, you still receive that return on it as well. And we touched on it, Andrew. I don't know if you expand a little bit on student property and how they've rose the rents over the last couple of years.
So yes, have they risen? Absolutely. And what we found because a lot of these developments we're selling are off plan, so Vision will be September 25, so we're what, a year away, just over a year away. But some of the developments have been maybe a 2-year build-in. And when we've been quoting rents of say 135, 150, we've actually, when we hit completion, more so now that COVID is of the past. We had issues during COVID for sure, as a lot of the overseas students went home, a lot of students just couldn't attend. But we have seen those rents rise, and probably over the last 3 years, we've seen them rise maybe 20%. The likes of, say, this year alone, we're looking at, say, London Road, where we have a great involvement on the resale side of it. We've seen rents at sort of 149 go to 169. So get my brain into gear, that's £20 on 150, let's say. We're talking over 10%, aren't we?
15%,
And what we're also seeing is those rents are now coming in at a 51-week term as opposed to a 45-week or some instances, a 40-week term.
And it's probably quite safe to say as well, to explain it, that these are the way in which they're valued and the way in which Andrew would take it on is to sell it, is they're valued on a yield basis, a bit like a commercial shop, not a residential property. They're not valued on a bricks and mortar valuation.
Starts back as
so
the rent.
You start back the rent, so you kind of starts off at sort of 9, 10, 11%. So not only are you getting these increased in yields, but as the rent keeps increasing, your value's increasing. So I always look at it as like one of the safest investments you can get. You're not going to get the huge growth in the booms, but you kind of I explain to my clients it's almost like a supercharged bank account that rather than getting 4%, you're not getting any growth. You put it in a bank account and getting 4%. You're getting 10%, and you are going to get a little bit of growth. It's not going to double in value over 10 years like your own residential house, but as your rents increases, 10% probably a bit higher than normal, but certainly your rents go up 3-4%. So you're getting your 10% yield and your 3-4% growth, better than any bank account.
Yeah. And it's important, you might think, well, you're getting a 10% yield shoot for 3 years, so why does it matter what the rents are? But you want to see after that 3 year period, where are you left at that point? When we price it up and we do it on the price list, we sort of ignore the rental assurance in some ways and say, look, it naturally yields 10%. We've had a couple of questions come in, so I just don't want to miss one. Stephen's asked a really good question, actually. Do you have students from one institution in development? It's a good question on this particular one, and I should have mentioned it earlier, is because the big sort of selling point of this purpose-built block is it is 5 minutes from the main university campus, but there's a brand new health and innovation campus being built right next door to this one, which is one of the biggest selling points.
It's the first one in the UK, isn't it?
Yes.
So this will be the closest accommodation block to this, health campus. And we all know, like medical students, things like that, they tended to be long year students. They'll be there 5, 6 years.
It's a 5-year term, or maybe a 6-year term. And what we found with London Road, I refer to London Road a lot, but what we found there, associated with Keele Royal Stoke University Teaching Hospital, the draw of that is immense, and the same will apply to here.
And they can't often stay in there, don't they? That's what you tend to find.
That's right. That's right. The percentage of rebooking, so you're there first year, second year, third year, it is quite high.
A lot of overseas.
It's that pull of medicine.
Yeah. But it does vary. Just going back to Stephen's question of, is it always with one single university? It isn't always. The one we've got in the likes of the Stoke area, you have Keele University, Staffordshire University, and Royal Stoke. So there's different universities.
We've just done the Sunderland one, haven't we?
Yeah, because they can be accredited by the university, and the vast majority of these developments are that we sell eventually when they're built and complete. But they're not owned by the university crucially on it. They're still privately owned on it. But they have them links. If you go on the university website, if it's accredited, they'll do links off to these accommodation blocks that people do.
In Huddersfield, they have their own accommodation officer who looks at the developments that are available. HUDLET, it's called. And we will get a vision accredited with them, and that will give us the link through. We're thinking it will be USL Urban Student Life will accredit themselves with HUDLETs and drive it forward that way. Very much so.
Absolutely.
So they're offered to the first year students as part of the application process.
That's right. That's right. And if you look at the number of students in Huddersfield, just short of 20,000. There are 13 universities that have gold rating, and Huddersfield is in one of those 13 out of 96. So its level of education is very high. A huge amount of investment going in as well. That's to keep that. And we talk about drivers, we talk about the story behind it. This is for vision. That's the sort of driver, the innovation centre right next door, the health centre right next door.
Well, I think it's on everyone's radar at the moment. So it should be that the NHS we need more people, we need money pumped into it, and I think this is a nice thing to be part of that, isn't it?
Yeah, and it goes back to when we're looking to bring on developments. I always joke about it, but we like a story.
We do like a story.
What is the story behind it? And this one was very much that next door to it. Srinivas has asked a really good question actually on service charges. It is relevant on it, because I completely take your point on it. There are some student properties where service charges can go for the roof on it. In answer to your question, well, it's a legal requirement for them to audit the accounts. So they can't just simply put the service charge up by £1,000 without actually showing clear audits of how they've got to that figure on it. And it's a balance, because I see where you're saying, a lot of these amenities, cinema rooms, gyms like that, is it going to take a lot to manage it? Well, it's going to increase the rents that people pay. So you have the balance of that. But also you've got 200 studio apartments to split that between.
You've got economies of scale.
Exactly, to do on it.
I think again, if we look at this is done by a boat, if you look at how the service charges are
so much lower than
they have maintained.
They're half of some of the stuff that I've seen out there for sale.
Some of the resales I look at, you look at that service charge, and you're right. You look at it and think, how much? Where did you get that figure from? When they send you the accounts through, and you think, well, I don't quite know where the money goes. And that does have an impact on it. But I'm glad to say, certainly through a boat, those service charges have remained at a very sensible level. And I think it is economies of scale. Again, referring to London Road, you've got London Road, Keele House, Orme House, all managed by the same company, Urban Student Life, we are homes for students, and then manage to maintain
Yeah.
and keep a control of the cost.
Well, that's going to be the key, you know, having a real good block management company,
Absolutely.
an experienced developer in place. So, you know, regardless of if you look to buy a property from us, a bit of advice, or if you're looking elsewhere, really find out of who that block management company is. Have a look online, see what their track record is. Is there anything that's jumping out alarmingly on it? Like I say, all we can really do is give examples of them, of what's done in the past. And as you say, they're.
I think if anyone's interested in Vision who's on this call, I think, you know, two good things. If you want to be go and have a look at the sites, I think it's quite exciting to see the site and the campus, but also to go and have a look at One London Road as well. You know, and you know, it's some of them are 3, 4, 5 years old in there. You know, and you know they're great, aren't they?
Yeah,
that's right.
Really, yeah.
That's it. And it's important to mention, obviously, it is an off-plan purchase.
Yes, it is.
So completion isn't until September next year.
Yep.
But the developer does offer interest on
4%.
4% interest on deposited funds. So when you exchange contracts, you get 4% interest on that monies that you put down. That accrues this whole year that it's been built, and it's deducted from your final payment. So that gives you a little bit of insurance as well, because obviously the developer wants to build it on time as quickly as possible. Because the longer he takes, the more discount effectively you're going to get from the property, because your rental assurance starts from the day you complete on it as well. So it works quite, has always worked quite well, hasn't it, on that front as well. Cool. So if you've got any questions on that, you know, or it is of interest to you, please do let us know. We're more than happy to send you the details on all of these developments that we mentioned. We've got brochures, price lists, everything like that we can send.
Floor plans, that's
Floor plans, yeah, that's it. Or you can, you know, book in the one-to-ones as well.
Totally.
So moving on to the next one, Grosvenor House in Wakefield. Well, this is a real classic sort of buy-to-let property for us, in the sense that it has this flexible lease that we've touched on in the past. So this is a complete development that is already tenanted, already producing a really good income on long-term AST, you've got 12-month contracts, that type of thing. But crucially, we have it in the lease that you can do short-term lets if you want to, and you can switch over.
You've got that
benefit.
flexibility.
Yeah, exactly. And Wakefield, again, great locations. I know you were looking at, Andrew, in terms of the corporate companies
That's right.
in the area. And that's something we look for, you know, where are we going to pull these corporate bookings? I think was it Simon that mentioned before, and you know, how would it affect us, this legislation? Well, as I mentioned, these corporate bookings is more our thing. And yeah, there was a couple on there, wasn't there?
That's right. I mean, the council have been very strong on promoting Wakefield and the sort of rhubarb triangle of this part of Yorkshire, and they've created the top 100 companies. Not created them, sorry, but list them as a top 100. So you've got the likes of Haribo.
Yeah.
They have their
you see that on the motorway, don't you?
do.
Big thing, yeah.
That's right. That's right. And Team 17, one of the major video game people. Don't really understand what they do.
It's not for us. That
not my
really
remit,
games,
but from all accounts, that they're up there in that side of it.
And those corporate workers, that, you know, they like these service departments. You know, in the past, these sort of people would have had to stay in hotel rooms. Yeah, and that costs, you know, the HR companies, you know, the departments to these properties. They prefer their clients, don't they, to go and stay in service.
In my 30s, I used to work away. I used to work away Monday to Thursday. Did it for sort of 2 or 3 years, and you know, this wasn't really the thing then. You know, I'm talking sort of 15, 20 years ago. And it was miserable. It was miserable. I'd go and stay in a hotel, and it was first nice we'd go and have a couple of beers the first few times, go and have a meal. But sort of once you've been doing it for a couple of months, you just want a sofa, you want to watch telly, get a takeaway, cook your own food, you get fed up of eating in the same hotel or restaurant.
When I left university, a friend of my father said, "Do you want a job?" And he was well up in BICC, British Insulated Coloured Cables. I said, "Bob, yeah, I'll have a job, thanks very much," because it was in Prescott, and I thought, I'll be driving a van around Prescott. Yeah. They sent me down to Camberley. Where's Camberley? I had to go and find accommodation. And in those days, this was like 1981, trying to find like a bed and breakfast or something cheap was hard. Now, short-term lets is corporate let, because I was down there for 3 months. We were doing optic fibre. Can you imagine 1982, optic fibre? We were taking out coax cable that could have been 2 foot wide and putting in a cable as thick as your thumb. And that would travel the speed of that coax cable. And that's what I was doing. So just as an aside, short-term lets would have been marvelous. Corporate let, absolutely. To find that accommodation.
People want their own space now, don't they? You know, and most of our bookings, you know, sort of, you know, like go on to us. Most of our bookings sort of 2 weeks, 3 months, 6 months, 1 year, and people, you know, they might stay there Monday to Friday, you know, but they don't want to be just in a hotel room. They want a kitchen, they want a lounge, they want somewhere probably to work as well. You know,
well, I think also if they do take it for a three-month stint and they do go home at weekends, they can leave all the kit there.
Yeah.
They don't have to keep taking everything out. You book a hotel room, you're out on Friday or Friday morning, all your stuff's in the car, you've got to short-term let.
Yeah,
cool. Far better.
100%. So in looking at the sort of financial side of it, so one-bedroom apartment here around about the 95,000 to 100,000 pound mark on it. The rents at the moment that they're getting, because they have got a long-term tenancy in there, is around the 650 pound per calendar month. So still a good yield that it's getting on that basis. But as I say, they're on rolling contracts, so you can give them 2 months notice if you like, because you are changing the business use of it to short-term let, so it gets around the section 21 on that. And you know, if we look at it from a short-term let point of view, so you're looking around about £80 per night and around the 70-75% occupancy. We're fortunate that we actually manage quite a few apartments in the Wakefield area, just around the corner. In fact, I'm in the 4-0 one. So our figures are very accurate in that we can show how well apartments are doing.
I think the key thing there, Mike, is also we have someone on the ground, don't we? So whilst we're based in Chester, we actually have an employee who is on the ground in Wakefield who administers these developments for us. So if there is a problem, it's not blimey, you know, it's a 2-hour drive for us to go and sort it. Nope, someone's there.
And we've got housekeeping teams, cleaners teams, you know.
Very much so.
Yeah. And it's another sort of feeder area, isn't it, to the likes of Leeds, which is 10 minutes away. You'll get people that stay that don't want to pay the big nightly rates of Leeds.
Premium of Leeds.
Yeah, that's it. But also from an investor's point of view, you're going to pay much less than if you bought an apartment in Leeds.
Half the amount, and you might get 20 quid a night more.
And you will get used to that as a company if we look for those sort of locations. You know, sometimes people say, "Oh, why aren't you going for the big cities?" Well, a lot of times,
Manchester, Leeds, Birmingham.
Preston's been very good at it. Preston's done really well.
That's it. You know, we're heavy on returns and what income can we produce our clients on it. And if a property is producing really good returns, well, guess what? It's going to be sold for much higher as well if you want to in the future, because another investor will see that on it. Decent, you know, lease length as well, 250-year lease on it. Comes with the 10-year build warranty of it. Some pictures there.
It's probably a good example of what I would call our bread and butter short-term net property.
No, I would completely agree with that on it. So we only have, I think we've got 1 or 2 maybe apartments left in there, something like that. So you know, if it is of interest, please do let us know. That one is available to mortgage buyers. I probably should have pointed out actually on the previous one, the PBSA, that is cash buyers only, and that is purely because of the size of studio apartments in there. If it's below 30 square meters, lenders will tend not to look at it, but this is one that would be open to finance buyers on as well. Cool. On to the next one. Probably a little bit more well-known area, Cheltenham, but very similar as well in the sense of bringing in those corporate bookings. We're up and running already actually with this site, aren't we? We've got quite a few apartments that are live and we're managing it as short-term lets, and it has got off to a terrific start. You know, those first 3-4 months of short-term let property aren't always the easiest. You're getting going, you're building up the relationships. Getting the repeat booking.
I think probably the first couple of months, you know, I think, you know, we're doing well when we're achieving sort of the 12-month AST, maybe just above. That's what I kind of say, you know, to expect the first couple of months. And then you're sort of into the higher amounts. But you know, this one is Cheltenham's.
That's it.
Off of occupancy straight away, isn't it?
And then the real exciting thing is obviously we'll come around next year is the Cheltenham races, Cheltenham Race Festival. You know, world renowned on it. You know, the spike in bookings that will bring. Certainly when we looked at it, you know, for a 1-bed, you're looking at around £500 per night in a lot of apartments. You know, there just isn't the supply there on it. So you know, huge excitement. And that is as well what I like about short-term let property. You know, I've got a short-term let property in Chester, and mine's actually near the Chester racecourse, and I always like that side of it.
Right.
Well, in fact, ironically, I sort of bought it with that in mind if I would get bookings from the races, but in actual fact, I've had that many corporate bookings that have blocked it out. It hasn't done it, but it's nice to have it. But yeah, it does remind me a little bit of that of Cheltenham, and
it's probably worth saying we do spend a lot of money. I don't understand any of it, but my clients ask me. We spend a lot of money on software and AI that looks at the pricing strategies, like hotels and that. You know,
that's it.
I don't know how it works, but it prices it.
Well, I'll
Man United are playing or
dynamic pricing.
That.
I think it's good, isn't it?
You've got dynamic beyond pricing, Airbnb. All kinds of different ones.
No idea like you, James.
but all the basics as well, you know, booking.com, Airbnb, sometimes it's worth just looking on that. But also going to our relocation companies. So we work with a lot of relocation companies that will come to us and say, look, we need accommodation in Cheltenham for 5 workers. What have you got at the moment? And we present to them those apartments. They won't go to your Joe Blogs 1 unit property somewhere. They come to recognise people. Well,
I guess because you can't move people around if you've only got 1 or 2 apartments.
Exactly.
You're not looking in 2 months' time for a weekend, but you're not going to be able to do it. Whereas we've got ideally 4 or 5 minimum within the block. A bit like a hotel, we can move people around. Can't we?
No, 100%. So yes, that's another one where we ask the relocation companies, quite often, a few times a year, what areas is the high demand at the moment? Myself, Paul, or whoever's sourcing at the time, we start with that on it. Where's the demand, and we follow that and try and find developments in those locations. So a couple more images of the interiors of the apartment. So real nice finish of it, and a good location of Cheltenham on it.
Nice building.
So price wise, like we mentioned, so this 1-bed apartment that's remaining, it's around the £195,000 mark, which is very competitive if you look at comparables in the area of it. Really good nightly rates. You're looking around the £112 a night is what the forecast was showing, and certainly started that way. So put that into a yield, 10-11%. If you're getting high occupancies, is more than achievable.
And then you put in those spikes of the races, other events, and that's the sort of thing that dynamic pricing looks at. It looks what's going to occur in the next month, 6 months, 12 months, and it just pushes it. Pushes the price.
And there's a growth one as well. I think Cheltenham, this one in particular, is all properties grow in the UK, but there's certain areas in the UK that I think you're going to get more growth than others, and I'd certainly would say Cheltenham is one of those.
No, that's it. So really good option, that one. And as I say, it's one that you can sort of ask us about the current figures on it. We can show you on it. You can go and look at the property. It's completed, ready to go. So if it's of interest, do let us know on that as well. So moving on to our final property of the evening. This is one we just launched. Literally a couple of days ago. So it's some of you will probably not have seen this yet. So St Andrew's House, which is in Lytham St Anne's. So you're talking sort of 10-15 minutes from the Blackpool area. Really popular area for people to visit. Again, it's an area that we already have a couple of properties, a couple of developments, that we launched. One that is already up and running and set up again really well, a bit like the Cheltenham one got off to a really good standard on it. This block has already got tenants in there. The rents are really low. They're low. Obviously, the previous owner of it has sort of neglected it. He's had it for a number of years, hasn't really increased the rents on it. So the idea is the developer will go in, will vacate the tenants on there, completely refurb the apartments on it, and give a number of options to clients. They can either do long-term lets, they can do short-term lets on it. But our focus really is the short term.
I think just touching on that, Mike, the low rent that these are on, I see on the resale side of that, I see that a lot where it's a good tenant. In fairness, it's a good tenant. They've been there 5 years, but they're paying just random figures, 800, but the market rent is 1,200. And that impacts on, if we're selling it back into the investment market, what the value of that property might be. And it's a salutary tale, I think, to, whilst you have a good tenant and you don't want to push the rents as high as maybe you could, you do need to keep pace with the market.
Because you never know what's around the corner.
Exactly.
You need that emergency exit strategy.
I was talking to one chap end of last week, same tenant for 13 years. The tenant's paying something like 800. And they should be paying 1,500. As a consequence, the value of his property in the investment was half of what it could have been. And it's just, you've got to keep pace.
Yeah, we've got a great example of it actually recently. The one in Chester that we had, there was an apartment in there that was being let out at, I think it was £400 or £450 per month. This same developer actually is the Lytham one, same construction company, went in, refurbed it. And it's been re-let out through us, through our traditional letting side of it, for £850 per month. So it's double from a refurb.
Absolutely.
We're not talking from a refurb point of view of ridiculously luxury or anything like that, but just reflooring, redecorating, new kitchen worktops, that type of thing on it. Sprucing up, and that one actually, I was about to say furniture, but no, that one was let out unfurnished.
Was it?
Would you believe? Right. Doubled it. So. There's huge value on that way of going in to it. So just going back to the location of this one. So you're talking, 10-minute walk to the beachfront, really popular area. I was there actually at the weekend with my family, and it was really busy. Lots of families on the beach and all sorts as well. You're 5 minutes from the town centre, from all the local amenities. But probably the big thing is the fact that to the rear of this building is the Royal Lytham St Anne's Golf Club. Host to a number of UK Opens, Ryder Cups over the years. Whether you're into your golf or not,
it's a massive.
I had a look before we come on this Zoom with Ian, and it's having the Ladies Open in 2026. And it's generally about every 10 years. It's always had the main open, which was 10 years ago. So there's no guarantee, but I would certainly think we will see the open there again in the next few years. Yeah.
But even if we don't, because I know some people have said that to us, but you won't get it all the time. But you will get societies that book all year round to play on this prestigious golf course.
I was asking James, we both live fairly close to Royal Liverpool, where again they've had the Open, and I can remember it being there twice now. The volume of people that come, that's in Hoylake on the World, the volume of people that falls in, the
hundreds of thousands of people.
I think it was something like 250,000 people attended the Open. And you think, here are 5 apartments.
Right,
and it's not just that, as Mike was saying, it rolls on from there. People see it on the television and they play golf. Do you know, actually, I wouldn't mind playing. Can I go and book something there?
Well, the clubhouse itself has got a couple of rooms in there. Like you can actually stay if you want to and book a round of golf. You're talking £1,000 for 2 nights to stay on there. But I'm not saying by any means this is going to produce those sort of returns, but you get a group of people that are playing might think, well, look, we'll play golf on the golf course. We'll stay in accommodation block 5 minutes walk from there on it. So we expect really good bookings. We've got good tie-ins with golf clubs. We've done it on the Wirral, haven't we? With our one that way on it, and this will be another one.
And you've got syndicates, don't you? 3 or 4 lads that play, or chaps, that play golf once a week, twice a week, that are maybe retired, and they as a roving syndicate, they go to different golf courses. My aunt used to play golf, and she could go and play Troon, go and play St Andrews, and she would do a tour of the Scottish courses.
How did you never get into it, Andrew? I've been trying to get you to play golf for a number of years.
I tried. I had Hoylake had a municipal, and there was a guy there that was a coach, had 6 lessons. I could not hit that ball. It was left, it was right. Anyway,
golf and snooker, I think, are the 2 hardest sports to try and learn.
I didn't have the inclination. I didn't have the desire. I think you've got to put a lot of time into golf to be good. And those that do, it's a good game for them.
No, that's it. But just going back to the actual building itself. So interestingly, on this one, a lot of the ones we talked about are leasehold properties and getting lease with the freeholder. This one, you actually get a share of the freehold, which is a real big selling point, having that control. There's no ground rent as well, like some of the others, and it's on a long 999.
So you used a good word. It gives you control of the building. So the question we had about service charge from
I think it was.
About service charge, because you own, there's 5 there, a fifth of the freehold. You can set your own service charge.
You would be setting up a management company.
There will need to
management company
create the structure.
This one's cash, but no reasons why. Once you purchase it,
later down the line,
they're all above 30 square meters, aren't they?
Big apartments. I was going to say that. I think the smallest one is 32 square meters. Some of the others are 40, on that way on it.
So no issues with mortgages.
It's actually a back-to-back purchase as well, which takes some explaining. But essentially, what the developer is doing is he's buying this block with you as the investor. So you will purchase it with 85% of the purchase price, and at that point, you legally own the apartment. You buy it with the developer on it. He has an obligation then to get the apartment vacated first and foremost, because the tenants are on rolling contracts, so that's his role to do that. You then pay another 10%. So sorry, it's 80% on exchange, then 10% when you've got the property vacated. They go in, do the works. We've got a real big team behind it. We've used on a lot of our other.
Well, we're using the same team as Chester Heights, and we can show you the finished product of Chester Heights.
Absolutely,
top notch.
That's it. So to get the works done, and then you pay the final 10%, and you're good to go at that point on it. So
and the works about 4 months?
4 months from vacant possession, So back to back is a real interesting concept. Again, it's probably not one for this evening to talk about, but it's something if you did want to book in a call and talk about it. I know some get slightly put off by it, but there is a real advantage there. You can get prices really good. I mean,
risk-wise, you're owning it, aren't you? You're owning it on completion.
Exactly. The risk is more in some ways with the developer, because you
totally.
legally own it at 80% of its value.
Yes.
They've got the obligation to do it on that way. But really good prices. I mean, they're all one beds, and they start from 90,000. They go up to 105,000. I think is the most expensive. And if you look at comparables in the Lytham St Anne's area, they're really good.
Yeah, absolutely.
These are well below market value. We can really confidently show on it. So like James mentioned, your financial advisor, head on there. You could look in the future if you wanted to pull money out quite comfortably, I think, and do that sort
There's
of
some providers out there who can do it from day one, but generally speaking, if you're going to get, what I would call more of a high street, lower rate mortgage, you're looking at 12 months after owning. Ideally.
That's it. And you might think, a bit of a seaside sort of place. Look at some of the pictures there. Is it just going to be leisure bookings? Well, no, it's not on this particular one. No, there's some big corporate clients in the area, the likes of BAE, that we've worked with on a number of properties that, not too far away around the corner is Preston, where we've had a lot of bookings for it that way. So, we will get those corporate bookings. We have got those corporate bookings so far on it.
Probably similar to Chester. Well, Chester's not by the sea. It's quite a big tourist place, and we get a good mixture, don't we? Yeah,
that's it. But even just, the standard AST market can be flipped across. Again, going back to the benefit of that, for 6 months in the winter, you could look to do it. We've already had the Lytham Festival, haven't we? That's been on the music festival, and we've had bookings as high as £170 a night.
Just for a small we're talking about, Cheltenham races, Chester races, Lytham Festival, those little spikes just add the icing on the cake, really, isn't it? That bonus on top of the standard ride.
And we haven't touched on it yet tonight, but self-use. This type of thing, people, you might look at it and go, what, we wouldn't mind taking the family there for a weekend, a couple of times a year.
We've got a number on angles, haven't we, which were more leisure.
And we're very, very flexible on that. A lot of management companies, you have to give the property to them, not to go into too much detail, for 52 weeks a year. But with us, if you wanted your friends to go and use it for a weekend, block it out on the calendar, not a problem at all. We're not restricted like that, are we? Which is a real selling point, I think, for stuff that you might want to go and stay in yourself.
No, absolutely. So brand new site, that one. Like I say, we've just launched. There's 5 units in there. Please do get in touch if it's of interest to you. We can send across the full marketing pack on that as well, or booking a consultation on it as well. And that's about it really for us. We didn't want to keep it too long. I appreciate you people giving up
there on the hour.
I appreciate people giving up their evenings. Hopefully you found it interesting. And like I say, feel free to get in touch with us. I think Ian's going to put on there shortly a link in the chat section if you did want to book a consultation call. What a bunch that is to pick from. But really experienced people up there. Don't be put off by the pictures. There's a lot of experience behind it. That built up, big portfolios for clients on there. Every single one of them that you see on that picture has built large portfolios for clients on it, and we're here to help. We want to hear from you of what you're looking to achieve of it, and we will certainly do that. So please do get in touch. We'll have all the slides. We can send it across to you all afterwards if you want to have a look at them, make some notes, watch it again.
It's like iPlayer, isn't it? If you want to watch it
again, you can watch it back. No, that's it. But no, thank you very much for joining us. I do really appreciate it. We try and do them once every couple of months, don't we, and go through it that way. Simon, appreciate you enjoyed the session. He's going to be in touch with you soon, James.
I'll speak to you soon, Simon. Thanks for coming on, mate.
That's it. And Srinivas, I know you've dealt with likes of Michael Johns and Paul in the past, so that's great. Thanks very much, Alan.
Thanks, Alan.
Appreciate your positive feedback. Haley as well. Haley, I think we've spoken in the past on it. I think you've dealt with Phil, so appreciate that. And Stephen as well. Like I say, on the sub-agent side, if that was of interest, do let us know.
Thanks
Shannon,
for the questions. We like the questions.
Kept it really interactive, which is good. Shannon as well. Thank you very much for joining. So I will leave you
to your evening.
Have a nice evening, guys. Thanks for coming on.
Really appreciate it. Thanks very much, guys. Cheers now.
Thank you. Bye bye.